Amid the artificial intelligence boom, one company is taking significant leaps in the tech revolution. For years, this company was known as a graphic card giant powering the most immersive video game experiences. However, the tides have turned. Lately, this very company has become the hottest name in tech, buzzing with innovation and making headlines across the globe. Still wondering what I'm talking about? It is NVIDIA. Their cutting-edge products and strategic maneuvers are providing the infrastructure for the digital age. More to say, they are the company behind companies like Google, Adobe, Tesla, NASA, etc. And that's not it. It recently got the tag of the most valuable company in the world with a market cap of over $3 trillion, making it a giant whose market cap is more than GDP of several countries. So hold tight and dive into the story of NVIDIA, the company that has become a powerhouse in the age of AI. We'll discuss why this company is suddenly gaining fame and making headlines. Then we'll explore NVIDIA's financial performance and valuation, followed by a discussion on whether NVIDIA is in a bubble or if its valuation is justified by the immense growth of artificial intelligence. Next, we will examine the stock's performance and explore how Indian investors can invest in NVIDIA via ETFs and mutual funds. Lastly, we'll discuss some Indian stocks that have benefited from the AI boom and conclude with some key takeaways. Let's begin. You're watching Informed Investor, an initiative by Equentis. To start off, founded in 1993 and based out of California, NVIDIA is a software and a fabless company which designs and supplies graphics processing units or GPUs, application programming interfaces, APIs for data science and high performance computing, as well as systems on a chip units, or known as SoCs, for the mobile computing and automotive market. NVIDIA's journey has been marked by groundbreaking advancements in technology, shaping the landscape of gaming, artificial intelligence, and autonomous driving. In context, a fabless company is one that designs the hardware chips and outsources their fabrication to a specialized manufacturer called a foundry. In this case, NVIDIA designs the chips and then outsources the fabrication to Taiwan Semiconductor Manufacturing Company Limited so as to focus on the core competence, which is design and innovation. But why is this company gaining fame all of a sudden and making headlines? Ever since the artificial intelligence boom and the world going gaga over self-driving cars to virtual assistants to cybersecurity to image and text generation and countless many applications, AI is revolutionizing how we interact with technology. And in this digital revolution, NVIDIA's GPUs, APIs, SoCs are perfectly suited for complex calculations needed for AI training and development. This sweet spot has made them a go-to choice for companies and researchers working on cutting-edge AI projects. Moreover, NVIDIA has become the company behind companies. What I mean to say is, many companies across industries rely on NVIDIA's GPUs to power their cutting-edge projects. Let's take you through a few examples. Facebook's Meta Universe, a virtual reality world, demands immense processing power. Meta utilizes NVIDIA's GPUs to render realistic and immersive experiences within the metaverse. Then Amazon's product recommendations to logistics optimization, AI plays a crucial role at Amazon. NVIDIA's GPUs help them analyze massive data sets and make intelligent decisions to improve efficiency. Furthermore, companies like Ford and Tesla rely on NVIDIA's technology to train the AI systems that control these autonomous vehicles. In fact, even Netflix and the famous ChatGPT are powered by NVIDIA chips. In a nutshell, NVIDIA has become the unseen partner for big companies across industries, making them ideal for tasks like analyzing massive data sets, running simulations, and training AI models. Amid all of this and the AI boom and the positive sentiment surrounding it, NVIDIA rose to fame, becoming the most valued firm, taking its market value to more than $3.4 trillion, overtaking the likes of giants like Microsoft and Apple. An interesting stat is NVIDIA went from $2 trillion market cap to $3 trillion in just 96 days, while Microsoft took 945 days and Apple took nearly 1044 days for the same. However, with the recent sell-off, it has dropped down to the third spot. What's even more astonishing is that NVIDIA's market cap surpassed the GDP of 189 countries, leaving only the top 6 countries boasting a GDP higher than NVIDIA's market cap. With the market cap of more than $3 trillion, as mentioned earlier, only the US, China, Germany, Japan and India and the UK's stand ahead of NVIDIA's market cap. Now moving on to the number crunching and understanding the performance of NVIDIA. First, let's look at the top line growth, which basically includes the revenue, which has grown at a CAGR of an impressive 53.6% over the last 4 years. In fact, in the year 2024, NVIDIA reported record-breaking revenue of $60.9 billion, showcasing an extraordinary growth of 126%. An interesting point to highlight is that NVIDIA chips and GPUs had a couple of main drivers. During last decade's crypto boom, NVIDIA's powerful chips were sought by miners of Bitcoin, which employ computer banks to solve puzzles that reward them with cryptocurrency. Then, during the pandemic, NVIDIA enjoyed a resurgence as Americans confined at home turned to the gaming computers, buying GPUs and AI performance optimizations to deliver maximum performance. And lastly, NVIDIA's current resurgence is fueled by a much more sustainable driver, the rise of artificial intelligence. Their powerful GPUs, once coveted by crypto miners and gamers, are now the workhorses powering the development of groundbreaking AI applications. From self-driving cars and medical research to metaverse and robotics, NVIDIA's technology is at the forefront of this technological revolution and used by several companies and countries. Coming back, now if we look at the segment growth, data centers recorded around 87%, which is a top contributor and amassed $47.5 billion and rose 217% from last year. Gaming, which was initially the largest contribution in fiscal year 22, has become the second biggest contributor, amassing $10 billion, forming 10% of revenue contribution. The automotive segment and professional visualization each brought in revenues of $1 billion. Now what about the gross margins? Another highlight is the gross margins of 72% recorded in 2024. This means that more than 72% of business revenue is left over after the subtraction of direct costs such as labor and raw materials, which is remarkable. Operating income saw a CAGR growth of an impressive 77%, and now when we look at the bottom line, which is a net income or profitability, it grew 80% to an impressive $29.7 billion. Moving on to the stock performance of NVIDIA. As mentioned, with all AI hype around, shares of NVIDIA have zoomed past and in fact emerged as the best performing stock in the S&P 500 index in the year 2023, rising an impressive 239% that year. And if you look at the 6-month time frame, it has delivered more than 150% returns, and in the past 5 years, it has witnessed more than 2,900% returns, making it a multi-bagger stock. Now, what about the valuation of NVIDIA? First, let's discuss the problem of valuing a company like NVIDIA. In the age of artificial intelligence boom, no one can figure out what NVIDIA's revenues are actually going to be, not even the Wall Street analysts covering NVIDIA or NVIDIA executives themselves. In fact, estimates for NVIDIA's sales have deviated from actual results by an average of 12% according to data compiled by Bloomberg. Coming to the actual number, NVIDIA shares are currently the most expensive stock in the S&P 500 index, with its shares trading for roughly 23 times the company's projected sales over the next 12 months. Even the other metrics like price to earnings ratio currently is at 69 times, implying that investors are willing to pay a premium of 69 times in NVIDIA to earn $1 of earnings. In conclusion, while NVIDIA is expensive relative to its broader market, it is justified given the rapid growth in revenue and earnings. Investors are willing to pay up for growth, and NVIDIA is indeed delivering. Now let's come to an interesting topic. Is NVIDIA stock in a bubble, or is it justified by AI growth? The stock market has a long history of creating bubbles, particularly in the technology sector. And AI is now the first technology to induce predictions of a materially altered future. Crypto was supposed to be the future of finance, and 3D printing was expected to revolutionize manufacturing. Neither crypto nor 3D has lived up to the initial hype. But AI is expected to be a game changer, and I'll tell you why. Big technology firms and dozens of corporations are making huge investments in AI. Hundreds of billions of dollars are flowing into NVIDIA chips and AI-related infrastructure such as data centers and the electrical grid. These investments are already paying off in direct AI revenue and enhanced productivity. Moreover, according to PwC report, it states that AI has the potential to contribute 14% or $15.7 trillion to the global economy by 2030, which is more than the current output of China and India combined. AI is predicted to increase productivity, raise domestic product growth, and contribute to scientific discovery, improve the healthcare system, and having far-reaching benefits for sectors like automotive, financial services, transportation, logistics, entertainment, retail, manufacturing, so on and so forth. And as a leading provider of the hardware and software that powers AI development, NVIDIA is perfectly positioned to ride this wave of innovation in the rapidly evolving AI landscape. And the numbers, as we mentioned earlier, speaks as well. In fact, NVIDIA's sales are growing so fast that it's hard to even estimate the growth projections and the potential impact of this. However, this also comes with inherent risks like the increasingly competitive landscape that other companies want to slice off. In fact, the largest customers of NVIDIA, including Meta, Microsoft, Google, and Amazon, are also making significant investments in the development of their own GPUs, making them the company's biggest rivals. Secondly, regulation uncertainty, as in the case of ethical and regulatory implications of AI. Stringent regulations could stifle innovation or limit applications of AI, hindering NVIDIA's growth. Now let's look at some Indian exposure and stocks benefited by the AI boom. This impressive rally witnessed by NVIDIA, being seen as the face of artificial intelligence boom, has also captured the imagination of Indian investors and market participants. If you're an Indian investor eager to ride the wave of NVIDIA's impressive growth but unsure where to start, several mutual funds and ETFs available in India offer a convenient way to gain exposure to NVIDIA. Here's a breakdown of your options. International exposure via ETFs. For those looking to invest in NVIDIA through funds with significant holdings in international tech stocks, there are several options. Mirae Asset NYSE FANG Plus ETF, with 11.5% of its holdings in NVIDIA, this ETF is ideal for those wanting a strong focus on global tech giants. Mirae Asset S&P 500 Top 50 ETF, this ETF allocates 10.5% to NVIDIA, providing exposure to top-performing companies in the S&P 500. ICICI Prudential Nasdaq 100 Index and Motilal Oswal Nasdaq 100 ETF. Both invest 7.5% in NVIDIA, offering a slice of the Nasdaq 100 tech-driven growth. Motilal Oswal S&P 500 Index. This holds 6.1% in NVIDIA and is a diversified way to tap into S&P 500's performance, including major tech players. Second is the sectoral and thematic funds. For a more targeted approach, there are also funds that focus on specific sectors or themes where NVIDIA plays a crucial role. Edelweiss Technology Fund with 4.9% in NVIDIA. This fund focuses on the technology sector, making it an option for those bullish on tech. Access Growth Opportunities and Access Innovation. Each with 1.1% stake in NVIDIA, these funds cater to investors looking for exposure to innovative and high growth sectors. Investing in these funds allows you to indirectly hold NVIDIA shares without dealing with the complexities of directly investing in foreign stocks. Moving on to some stocks benefiting from the AI boom. As mentioned earlier, artificial intelligence and semiconductors have developed a mutually beneficial relationship, each driving advancements in the other. As a result, semiconductor stocks have significantly benefited from the AI boom. First is Netweb Technologies, which is a semiconductor and a system design services company based in Hyderabad, India, which focuses on designing semiconductor products and SoCs for computing, network, and consumer applications. In the last 6 months, Netweb's share price has surged 190% with a 110% increase in the last month alone. As investors look for the next NVIDIA, Netweb Technologies has attracted significant attention. Recently, the company secured a 509 crore contract from the Center for Development of Advanced Computing for developing a high-performance computing SoC using 5nm technology. This contract is expected to open significant market opportunities both domestically and internationally. Following this contract announcement, Netweb's share price hit an upper circuit of 10% at Rs 142.2. Next up is Tata Elxsi, which is a design and technology services provider supporting the semiconductor industry with comprehensive solutions including VLSI design, verification, and software development. Over the last year, the stock has declined by 7.7%, but historically it has shown remarkable growth, surging from Rs 500 approximately to 10,500. It's the only semiconductor stock that has exhibited the share price multiplier effect similar to NVIDIA. Also, few months back, the Tata Group has partnered with NVIDIA to develop AI computing infrastructure and platforms in India. This collaboration aims to build a state-of-the-art AI supercomputer powered by NVIDIA superchip. Tata Communications will work with NVIDIA to establish an AI cloud, enhancing the capabilities of generative AI applications. TCS, another Tata Group company, will leverage this AI infrastructure to build and process advanced AI applications as well as skill its workforce, further solidifying the relationship between Tata and NVIDIA. Lastly, Netweb Technologies is a high-performance computing server manufacturer. Last year, Netweb became a manufacturing partner for NVIDIA superchips. It's part of the NVIDIA supply chain and assists in distributing its product within India. Because of this association with NVIDIA, it benefited from NVIDIA's bullish run. In May 2024, Netweb Technologies reported its highest ever quarterly and annual income and profits for the quarter ending March 2024. This growth was driven by a surge in demand for AI-based solutions, resulting in an 182% rise in its share price over the past year. Now, to conclude, NVIDIA's transformation from a graphics card giant to a leading player in the AI revolution has been remarkable. The company's cutting-edge GPUs and strategic partnerships have positioned it as an essential player in the tech industry, driving advancements in AI across multiple sectors. With artificial intelligence poised to add about $15.7 trillion to the global economy by 2030, several players like NVIDIA sit at the forefront of this revolution. While the future is bright, it does come with its share of risks. Having said that, this is me, Ralston, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.